Alrighty, so you've seen kind of the theory diagram of the entry model. So in this lesson, we're going to go through one example on the chart, but purely just to show you the exact mechanics of how we actually take the entry. Okay, but then all of the remaining lessons in this module is where we're going to spend a lot of time focusing more on when you should be taking this entry model. Because the LC entry models in general, so LC-1 and LC-2A, they are based on the exact same entry models we were using before, right? Like LQ-EM1 or LQ-EM2A. It's exactly the same rules, waiting for the same liquidations in the exact same areas, but we're just doing 2 steps less. With the new approach with LC, we are not waiting for the PBL to fail, and we are not waiting for a bullish change of character. Okay? We are simply entering here rather than here. So everything up until this point is all the same like before. It's nothing new. Exact same with LC2A. It's all the same. We are just getting in slightly earlier. We are not waiting for the PBL fail and choke. Okay? So less confirmation makes it in theory a bit more aggressive. Okay? But we have found that overall it's far more effective for your results. The point I'm trying to get clear and across to you is that knowing when to use them is super, super key, even more key than before. Okay? And that comes in with your medium time frame narrative building and medium time frame POI selection, which is why, again, the rest of the lessons after this are going to be focused around that. Okay? So, not going to talk much about the medium time frame idea. We'll actually come back to this example in a later lesson when we talk more about the narrative building of this particular trade and the POI selection, etc. But essentially, we have bearish M15 internal structure here. The M15 is going to be my medium time frame, okay? And we're just going to be looking for shorts playing a continuation of this bearish M15 internal structure, okay? That's as much as we need to talk about that for now, because I just want us to focus specifically on the exact details of how you enter the market. So in terms of POIs, this one, the POIs, if I just kind of look at this leg, right, we're going to be looking for something in this leg to enter on. It's kind of just a bit corrective price action, and then we go. So the POIs aren't super clear, but this is how I had it drawn on my actual pre-session analysis, which you can double check in the Discord if you don't believe me. This being the primary POI that I'm interested in, it's at the extreme of the move. So this is what I would classify kind of as the unmitigated extreme. Yes, it's not the clearest the way it formed. It's a little bit corrective, which is why I've just taken the larger buy to sell, okay, just to clean things up a little bit. Now, yes, technically, I know some of you be thinking, well, Matt, isn't this a mitigation here and then a move down? Yeah, it kind of is, right? It's not ideal, but I just view this essentially as efficient price action with prices trickling down before we came. If we had price action that was like this, a clear pullback, a clear breakdown, or pull back into it like that, and then led to that move, then yes, that would be a much clearer mitigation. But in my experience, and as you guys will know who are more experienced, a lot of the times these POIs will still hold, price will come in and go like that, so I'll still keep an eye on it, okay? But what I also did is I also drew another POI on this clearer one here, right, where we do clearly have that thrust candle that closes below the low, you can draw like that led to the move. So these are both well priced, they're at the top of this internal range. I'm happy to look for an entry model from either of them, but obviously the higher we push up into this POI, the better. So yeah, not the clearest, nicest, most textbook, perfect formation of how a POI likes to form, right? This is nice and clear like this, nice big candle, but for me, this is valid. So I did just want to cover that because I know I'll probably get a few questions and concerns around that. So we'll revisit the whole medium time frame narrative with this in a future lesson, but essentially we're just looking for shorts from either of these general areas to look for the continuation of the move, okay? So lower time frame for me is going to be the M5 here. So as you guys have learned so far with LC2A, once we get that clear pullback to our medium time frame POI, right, what would we wait for LC2A? We would look to see, well, step 1, we have our POI mitigation, ticking the box. Step 2, do we have a strong liquidation in the pullback, right? So this is the pullback here, right? The start of the pullback. Do we have any strong liquidations? Well, what's the strong liquidation? We need to see a strong high get taken out. So do we have any strong highs here? Well, what is the definition of a strong high? A strong high is a high that has broken a low to the left, right? Not looking at internals, we're looking at, did this high break this low to the left? No, right? This high clearly didn't do that. Did this high break anything to the left? No. We just have bullish fractal structure moving to the upside. None of these highs broke that low. This high did not break this low. So there is no strong liquidation here. There's no fake break, okay? You need to be very, very comfortable with that. So if you're waiting for LC2A, what would you need to see? You would need to see price pull back to form a high. Price would then come up and take that high. But obviously this high has not broken the fractal low that's down here. So this here would not be a strong liquidation. But the reason why we'd want to pull back here is so then now if we get a break of that low, right? So that's a bearish change of character on the M5, that would give us our strong high, right? So then if that happens, we would then use that as our potential fake break and we would look for a liquidation of that high, right? For price to take that out, we'd still want to see the POI being respected. And then if we get our, if it tags us in with the candle breaking the previous candle's low, that would be our entry. So this you need to be very, very comfortable with. This is the fake break entry, okay, where price comes into our POI. We wait for a high to break a low because that means that this is now a strong high. And then we wait for that high to get liquidated. Okay, we wait for a bearish change of character and then we look for the extreme high that caused a change of character to get liquidated. So that's what you can wait for. Okay, now, if you want to introduce this additional entry model, you do not have to, but if you do want to, whilst you're waiting for a fake break to form in the pullback, right, when you're waiting for LC2A to form, we can also now use liquidity in the leg to the left, which is what we call LID. Leg inducement is what that acronym stands for, okay? If you want to use this is where we can look, again, we keep saying it, we can look for strong liquidity in the leg to the left. Now, I'm going to keep repeating this. There is only a few specific scenarios really in which you should ever be considering using this entry model and saying to yourself that yes, I do want to look for lid to the left. And that is again what the rest of this module is going to be focused on, because it's very, very important that you are not using this entry model every single time you come to your desk and every session you're trading. Okay, this entry model is like a little bonus entry model that you should only be thinking about using in reasonably rare circumstances. So a lot of the times you'll simply just be waiting for LC2A. You'll be waiting for strong liquidations in the pullback. That's what you want to be focusing on 70 to 80% of the time, maybe even more. And some of you may only want to trade that, okay? Because using liquidity to the left, it's going to almost always be there. If you're using lower time frame lid, right, it's going to be there almost every time you're looking to trade a POI, which is going to mean there's going to be entries all the time. There's going to be a lot of low probable trades, okay? So I want to really, really make that clear that you have to be very, very disciplined, and I will say experienced, to know when to use this entry model, because it is far more aggressive, okay? Because when you come down and you go, right, I've got my MTF, my medium time frame POI mitigation, okay? I want to wait for a fake break which hasn't occurred yet. Okay, let me just see, is there any lid to the left? Can I get involved? And there's almost always going to be lids. So that's why you have to be even more selective of when you're going to use this, okay? So what is valid as lid? Okay, some of you who've been here a while, you should definitely know what lid is. For those of you who don't, lid is any strong liquidity that is in this medium time frame leg to the left. Okay, so this is lid, anything within this red circle, because that is basically what we refer to as the leg. This is the medium time frame leg. Okay, so if I look at, use your medium time frame to kind of help you if you find that a bit confusing sometimes. This is a bit of a clearer example because we have nice, clear, right, trending price action. But sometimes it can be a little bit more messy. But basically, if you look at your medium time frame and you see that this is the clear leg down, right? And then this is the medium time frame pullback. This is where the PBID is going to be, your pullback inducement. That is where we look for the fake break to occur. This is where we look for the lid, okay? The leg inducement. So revisit the liquidity module if that's not clear. I can't really make it any clearer than that. This is lid. This is pullback inducement, okay? So if we're looking at this entry model, what counts as valid lid? Like I said, it must be in this leg, but what is strong liquidity in that leg? Well, it's any structural high, okay? So for me, for a definition of a structural high, see here how we have a fractal pullback? This high then broke the low. That counts as a structural high, right? Because there will be induced liquidity behind that high, right? That high is a structural high. Therefore, we assume there is strong liquidity behind this high because it broke structure. Okay, so if I bring price back a little bit, say to here, at this point, so I'm not telling you that you should trade the liquidations of this. Right now, I'm just going through what is the minimum definition of what lid is. Lid is leg inducement. So so if we're bearish, it's any structural high in a leg. That is technically lid. Okay, it doesn't mean you should trade it. It's just understanding that that is what lid is. Okay, so let me draw on every single valid piece of lid on the M5. This is a structural high. Okay, so at a minimum, we can say there is strong liquidity behind this high because it's a high that broke structure and price has not yet traded past it. So it's kind of what we call available liquidity. There will be available buy-side liquidity above this high because it's a high that broke structure. Okay, so anyone, there'll be people who are short and they'll have their stop losses behind the structural high because it's a structural point in the market. So if you're short and you have a stop loss, your stop loss is a buy order, right? Because if you get stopped out, you need to buy your short position back from the market. So we know that there's going to be buy side liquidity for that way. There'll also be people looking to buy the breakout of this high, right? So that's obviously going to induce buy side liquidity behind that high, right? This is all covered in the liquidity module, so make sure you recap that if this is confusing to you, right? So we're just simply looking for where is there available buy side liquidity in only this leg to the left, leg inducement, right? So we say it's available liquidity because price has not yet taken liquidity behind that high. So at this point, there's lid there. This is the next structural high here, right? This is a high that broke the low, okay? I don't know if they're perfect equal highs. Yeah, they're perfect equal highs. So that's how I would draw the lid there, okay? This is another high that price has not traded past since. That's valid lid. Right, for instance, this here, this high is not lid, okay? Why is this not lid? Yes, it is a structural high within the leg, but price, if I zoom in, has already traded behind it, right? We've already taken and used the liquidity behind this high. So this is not available strong liquidity because it's already been used. It's already been swept. The orders have already been liquidated and it's already led to a new move. So that's why for lid, we're only looking at these highs that have not yet been liquidated. Okay. So again, following that logic, this is the next high with available strong liquidity behind it. This high too. So you can see now already, if you are using lower time frame lid as potential strong liquidation points to use for an entry, very often there's going to be tons of them, which means that if you trade every liquidation of every single one of these highs, you're going to get in trouble if you don't use it in the right area, right? Okay, so they are technically all the areas. I mean, you do technically have this high within here, but if price liquidates that high, right, at that point, what's going to happen? The POI is going to have failed, therefore it's not valid, right? The POI needs to be respected. So these are all potential, on paper, these are potential, well, let's just reiterate. These are all valid, what we call leg inducement, right? Because these are liquidity points in the leg. So obviously we're not going to use any of these until we actually get our POI mitigation. Now, the textbook and higher probable entries you will see with this entry model are where the lid is basically right within or just before the POI. Like here is just before the POI, okay? They're going to be your textbook entries, not using like stuff all the way down here, okay? But I just want to go over what is the most, what is what is valid, and technically all of these are lid. Okay, it's a horrible acronym, but yeah. So let's play this forward, right? Now bring it back one candle. We get our POI mitigation, okay? And let's say that this is a scenario in which you believe is valid for you to look to use lid. Okay, so step one, POI mitigation. Do we have a strong liquidation? Well, we already know that we didn't have the fake break in the pullback. So this is where we go, okay, I want to use some lid in the leg to the left. Now, technically we have lid all the way down here, but not really too near I want to use. But even if you did, the way you can define it is the exact same way we did in LC-2A, which is the PBL still active, right? And then you can look at your PBL down here. Now, if you take the sell to buy, you could say, okay, well, we've had that range. We could say we've had a pullback, a mitigation, and we've pushed up higher. And therefore, this is no longer valid for you. You wouldn't use it. If you're a bit more refined, then you could go, yeah, it is valid. Okay. But this one isn't really that relevant anyway. It doesn't matter. Why? Because we've got one here. So you're always going to use the nearest one anyway. So you don't even really need to debate too much about that. And then this one, we can still use this as the PBL, right? This is the clear demand that led to the liquidation of that high. Okay. So the problem / question of how do I know if strong liquidity is too far away for my POI to be relevant? Remember, that's where we use the PBL method. It's not the most perfect solution, but it's one mechanical solution in which you can use. And if this PBL is still active, right? If it hasn't had a mitigation that then led to the break, then you can use it as a potential entry, right? You can say that this liquidation here is still relevant. So we now have our POI mitigation. Step 1. Step 2, do we have a strong liquidation? Well, yes, we have a liquidation of this lower time frame lid, right, in the leg to the left. So that's valid. So therefore, if you want to trade this, it's the exact same rules as LC-2A, right? That's your liquidation candle. You put your sell stop order below the low, whatever entry buffer you're using, and then whatever stop loss buffer you're using. Let's just say we use 2 pips for now. And that would be how you would size the entry. Now, whether you should take this entry or not, again, is going to depend on your medium time frame narrative, whether you're happy with the risk reward, all of those things. I'm not getting into that for now. This is purely just the mechanics of how you would enter if you know that you want to enter here. Okay, POI mitigation. Step 1, strong liquidation with the lid to the left. Okay, this is where you would then place your entry order on this candle. Next candle breaks that candle's high. So the very, very second that the high of your entry candle is broken, you would cancel your order, right? And you would wait for this new candle to close. Is this POI still being respected? Yes, therefore wait for the candle to closure if you want to take the trade, if the risk reward still makes sense, etc., etc. And then size it up. I'm not going to keep doing it perfectly to do it. You guys should know basically how to do that. Price pushes up higher again, cancel your order, wait for the candle to closure, resize. It's still valid because the POI is still being respected. You would enter on here, okay? Inside bar, so now you do nothing. You either wait for your order to get tagged in or you wait for the candle high to break and then you would cancel your order, okay? So with inside bars, we do nothing. Another inside bar, so we do nothing. And as long as obviously it's still within your session, then you can leave your order on. Okay, now we push up higher. Now we cancel the order, okay? Now this POI, this initial one we're looking at, this one is now finished, so we delete it. Okay, the trade idea from that lower POI here is gone. But we're now in our higher POI, which is nice. It's a higher probable POI, okay? So same thing, POI mitigation. Do we have a fake break liquidation in the pullback? No, right? This high did not break any structure. So you would need to see what? You would need to see this high break that low. That would give us our bearish M5 chalk. You would then look for a liquidation of that high, right? And then you would take the entry if you wanted the fake break. Okay? But now what do we have? Now we have a liquidation of this high to the left, right? So we can always use the most, the nearest liquidation. Yes, there are valid ones down here, but they're not relevant anymore, right? We may as well always use the nearest liquidation here. Okay? And obviously we've taken even further highs here, right, to the left. You don't have to have them all drawn on as long as you've got at least, one that's relevant. That's all that matters. So again, step 1, POI mitigation. Step 2, look left. Valid lid liquidation. Okay? So we can set our entry order below the low of that candle. Okay, I'm not going to size it up perfectly, but you guys get the idea. Inside bar, so we do nothing, we wait. Next candle pushes up higher, so we would cancel our order. Is the POI still being respected? Yes, we are still within the POI, so the trade idea is still valid. Okay, sell stop below the low, and then again, size up your trade. You still need to ask yourself the question, does the risk order make sense? However far you think price can go, etc., etc. And that would be how you size the trade up. So yeah, it can seem a bit confusing. I've got all of these highs drawn on, but when I'm doing this like in a live market or back testing, I don't need to draw on every single high, right? I'm just looking at, have we taken, an obvious, have we taken lid to the left? Is the PBL still active? Yes. This is the PBL that took out that high, right? Price has clearly not come into it. I made a clear new higher high. We've also taken more liquidity here anyway, so that would still be a valid trade, okay? And then inside bar do nothing, then you're tagged in, and then you whatever your trade management is, okay? So that might seem a bit of a complicated way to explain this entry model because in reality it's very, very simple. We are literally just looking for our POI mitigation. If there's no fake break built to the right, we can just look for a liquidation of a high to the left. Okay, that is it in a nutshell. But I know that there could just be some questions around exactly what is valid and what isn't. So I kind of wanted to go over this almost painstakingly slow to really make it clear. Again, I'm going to keep reiterating there are only very specific scenarios in which you should even be thinking about using the entry model and even thinking about using lid to left because this is extremely aggressive. Okay, so I would say you're not comfortable with identifying LC2A, you're not really consistent with executing that, you're not consistent with your results, you're inexperienced with building the medium time frame POI narrative. Do not touch this entry model because I think you will end up burning your fingers, right? This is a lot more aggressive. But it can be effective when you know when to use it in the right times, which we're going to try and do my best to teach you in the following lessons, okay? But again, the dynamics are POI mitigation. I myself personally are going to prefer like waiting for that fake break here, right? Ideally, that's what I want to see. I want to see a nice fake break, a high that breaks a low. We see that chalk here. we see that high get liquidated. That's my favorite entry model. I want to get in here. Okay. Sometimes that isn't going to happen. And this is where we can use lid to the left. Now, a great thing about this one, which was even better, is if you look on the M15, what do we have? That high that we used is valid M15 lid, right? Your medium time frame lid. So obviously if it's visible on your medium time frame, that lid that we're using, in theory, that should be higher probability, right? Because time is power. The higher the time frame we go, the more significant it is. So again, we'll talk about this later in the module, but some of you may want to only use this entry model with medium time frame lid rather than using lower time frame lid. Okay, I haven't actually recorded the data on the difference between medium time frame and lower time frame lid. That might be something that could be a good idea for you to do. Okay, because you may want to be, until you're a bit more experienced, you might want to introduce more stricter rules to make it stricter and go, right, I'm only going to use medium time frame lid, right? But I mean, yeah, this would be valid medium time frame lid as well because we have a fractal pullback there. So that is a structural high on your M15. Okay, this candle failed to break the previous candle's low. There's your fractal pullback. That would also technically be medium time frame lid, right? Now, you also can use a little bit of common sense. There are going to be times where, you're not quite sure if you want to use, like we've got lid all the way down here. We get an initial mitigation here. We're coming up with a lot of momentum. You might be like, I'm not too keen to use, to get involved. You might want to exercise a little bit of patience / discretion and go, okay, yeah, I can recognize there's a valid maybe entry here, but I'm going to wait for a bit more. And then when you see, okay, we've taken clear medium time frame lid here. We've literally mitigated almost the extreme of this extreme POI. We've then seen price start to retrace. You go, do you know what? Okay, now I am happy to get involved because there's no real room for the LC-2A to form at this point, right? Because if we got the bearish shock here, which we did, you would then be waiting for a liquidation of this high. And if price liquidates that high for the fake break liquidation, well, the POI has already failed and we're probably going higher at that point anyway. So do you know what I mean? There are some ways in which you can kind of use a little bit of extra patience and a little bit of extra discretion to go, do you know what? I'm not going to take the early LC-1 entry. Oh, well, now we've literally mitigated the last level that needs to hold if this trade idea is going to continue. So therefore, now I'm willing to get involved with LC-1. So do you know what I mean? By not blindly just taking every entry, but maybe sometimes wait, I don't really want to take LC-1 here. I'm not too sure. Okay, now I've seen a lot more confidence to get involved. Now I'm going to get involved, right? So there are things you may want to use a little bit of judgment, use that 10 to 20% of discretion to add to your trading, as it makes sense to do. So this is a nice, clean bit of price action, very obvious trade idea. And these are the types of times in which you want to take it, but I'll go into more detail, like I keep saying in the upcoming lessons of when you should consider it. I'll try to make it as mechanical as possible as I can for when you guys should be thinking about it. But I'm just very, very, very concerned. I mean, it's just part and parcel of what's going to happen. Inexperienced people, as you come through here, I get it. You're going to see a central model, and then you're just going to want to take trades, and you're going to be hitting them left, right, and center every session, every day, and you're going to burn your fingers. It's going to damage your mental and financial capital at times when you're going to hit those inevitable periods of unnecessary drawdown with this. So use this entry model with caution. I'm going to have to just warn you as much as I can. Okay. Don't be just trading every single liquidation of every little lower time frame high in here because you're going to have a difficult time if you do that. Okay, so yeah, we'll go into this in a lot more depth. We'll try and cover a lot of trade examples and we'll combine it with the phases. But hopefully it makes sense as to how you actually, the mechanics of the entry model. There really should be minimal confusion for those of you who already understood liquidity entry model 1 and liquidity entry model 2A with the old style. What we are now doing with the LC style is exactly the same. The rules have not changed on how you identify liquidation or anything like that. We are simply just entering a little bit earlier, right? Rather than waiting for the PBL fail and choke, we're just getting in at this point rather than waiting for that. Okay, so all the rules are the same. The only difference here is I'm saying that you can use lower time frame lid, but obviously exercise that with caution because it is a lot more aggressive. So hopefully that's clear. It's all built on the same way as LC2A, except rather than waiting for a strong liquidation in the pullback, we can use those highs and lows to the left. But ideally, you want to be kind of focusing on the liquidity points in the leg that are very near or within the POI for the most part. Okay, it's obviously a little bit of discretionary of how near something is. And the PBL method is one way in which you can mechanically help with that. So watch the PBL common mistake video in the LC2A module again if you're unsure of that. But yeah, we'll go through more stuff. Hopefully that's kind of as clear as I can make it. So hopefully there's not too much confusion in this. And yeah, let's do it.